there's a fireside chat between David Numdar and Arthur Hayes. David's going to be interviewing Arthur. An intimate fireside chat with one of Asia's top crypto CEOs. Entrepreneurship and investment in cryptocurrency in Asia from the beginning until today. What are the market dynamics today, the opportunities and challenges? A bit more about David. You've heard from him a couple of times. He's the managing partner of Abound Capital. He's a co-founder of Galaxy Digital and SolidX. And he's also not averse to risk, because as we heard yesterday, he almost has his skydiver's license. That's a bit like almost being regulated, isn't it, David? Which is, they let you throw yourself out of planes and they hope that you miss the ground. Please welcome David and Arthur to the stage.
So as Eric mentioned, yeah, skydiving is a big thing for me. And after he mentioned it yesterday, a couple of people from the audience have come out to me to tell me just how many jumps they've had. So I have a lot more skydives to do, and I have to take Arthur on his first one soon. Yeah. So this is an absolute pleasure for me. Arthur's a dear friend in the industry. We actually started our careers together back in Hong Kong during the financial crisis. And we also started our careers in crypto around the same time. And I was looking back on some old messages of ours back in 2014 when we both started our businesses. And he had come to me looking for help to meet with some investors in New York. And I had tried to make some connections. And I realized now, looking back on it, I was talking to my other co-founders from SolidX then, that BitMEX would have been a much better investment than Bitcoin, even at that time. So that was one of my regrets, but still happy to be here with you. So why don't you tell us a little bit about kind of what you were doing before crypto, just to give the kind of investor audience understanding where you came from.
Sure. So I started my financial services career in 2008 at Deutsche Bank in Hong Kong. My first day on the trading floor on the index vol desk was the day that Lehman had went to file for bankruptcy in New York. So it was a very interesting day of the head of trading running out to the desk, telling us which banks they could trade with and whose credit lines were cut. And so that was the start of my career in finance. I spent the next 5 years doing ETF trading, futures arbitrage for different equity indices across Asia. And then luckily I got fired in 2013 from Citibank.
So how did that prepare you for what you eventually started in crypto? When you saw the market and you came up with the idea for BitMEX? Yeah,
so when I started trading Bitcoin, I remember there's an exchange called ICBit at the time. It was the first futures platform based somewhere in the Caribbean with two Russian guys. And they had a pretty shitty looking HTML website where you could trade futures contracts on Bitcoin. And I somehow found out about the exchange, and I went online and I looked at the prices for this thing. And whatever the price of Bitcoin was at the time, the future was trading at about a 200% premium to Bitcoin. And this was my bread and butter trade at work. You sell futures contracts, you buy the equity index, you roll it, you're in the financing, right? That's pretty much all we did. And so to earn 200% for doing pretty mindless work, I thought this is pretty interesting. So I went on Mt. Gox, I bought some Bitcoin, I sent it to this other exchange, I sold some futures contracts, I had all the math in my spreadsheet, waited a month, rolled my contracts, checked my P&L, it was correct, and so then I just started doing that, and that's really how I got started in crypto, and just applying just simple trading strategies that I did all day for the last 5 years to this industry.
Oh, I remember that. I was on Vercurex, was the only one at the time, ICBit, and if you think back to this period, 2014, the risk was, you brought up Mt. Gox, so that was one of the kind of largest, most well-known kind of exchange hacks and collapses. Somewhere between $400 and $800 million disappeared from there. I think it was about 800,000 Bitcoins. But from there, the biggest risk was anywhere you put your money on, worrying about how soon you could get it off, right? Worrying about the financial plumbing and everything.
Exactly.
And so, that was part of what led me to, when I was founding SolidX, to look into, in the US, the first ideas that we came up with were a Bitcoin ETF and Bitcoin derivatives, or total return swaps on Bitcoin and Ether and other stuff that was coming. What I found working out of the US was that wasn't the right place to do it. As Hester Pierce has mentioned just before, 4 out of the 5 SEC commissioners, despite what she thinks they should have done, they still have yet to approve a Bitcoin ETF. Hong Kong has turned out to be a much better location to do a derivatives exchange.
So, I mean, we're technically not a Hong Kong exchange, but the Asian market, I think, is perfectly suited to this type of trading because the traders in our market really understand derivatives and they're used to trading it. So if you go walk down, Queens Road Central in Hong Kong and you go to all the major banks, you'll basically see them advertising complex structured derivative products that rip the face off their customers. But that's what people in Asia like to trade. In Korea, it's auto-callables. In Hong Kong, it's warrants. Same thing in Japan. So the market's used to trading these types of derivatives. And so If you bring it into a crypto component, you have high volatility, you give some leverage, and it's a successful product.
So one of the things that I actually remember that you started to do back then with the Crypto Trader Digest was really break down, take the information and the knowledge that you had from the traditional trading world and start to share that with people and kind of bridge the gap from an educational standpoint of teaching people of what it was like to really trade derivatives products. So kind of, do you want to talk a little bit about that and how you thought about that from an education standpoint?
Yeah, so I mean, back in 2013, 14, obviously most people were comfortable trading spot, right? You go online, send your dollars or whatever fiat currency, buy some Bitcoin, trade around that. Maybe there was some margin trading on Bitfinex and some of the other platforms available. That was what people really understood. So when BitMEX and OKX and Huobi and all these other platforms started offering futures trading, it was like a complete mindfuck for a lot of crypto traders because they didn't really understand these types of contracts that were being offered. So it was a big educational gap in terms of where the trading volume was and where you needed it to be to actually have a successful exchange. So I took it upon myself to attempt to educate people on some very simple concepts about derivatives so that they could earn some stable income, because the market at that time was very distorted in terms of premiums and discounts for different contracts. Now it's obviously a lot more efficient, given that there's large prop trading firms who are applying these strategies and for basis points rather than like whole percentage points.
Yeah. And so now, I guess as the market's evolved, going back for the last 6 years, what have you kind of seen through the different market cycles? How have you kind of adapted and reacted to that, and kind of what have been the interesting things you've noticed as the market's evolved?
Yeah, so I'd say probably pre-2018 is margin trading business, right? That's what traders really understood. They understood borrowing Bitcoin, borrowing dollars, borrowing Ether, whatever, to affect some sort of leveraged or short type of strategy. And the derivatives platform, as well, successful, that wasn't really the key thing that people were really trading. After the market sort of collapsed after the altcoin bubble and $20,000 Bitcoin, 2018 was really about derivatives, because while the price pretty much collapsed, down 80 to 90% during the year, the trading volumes on BitMEX and some of our competitors were healthy, if not multiples of what 2017 was. So people embraced leverage, they embraced futures contracts, they understood what they were doing, they were forced to learn that this is where the liquidity was, so now they really need to understand that. And I guess 2019, forward 2020 is, I guess, options this year. We've had, 3 or 4 different exchanges who've launched some sort of optionality product in the market, so we'll see how that market matures.
Yeah. So how have you thought about, I know we had talked a couple years ago and have thought about being very thoughtful and methodical about introducing new products, and you have a lot of people on your team that are actively studying the market and thinking about that. Where do you think, how do you think you've done with that? And how do you think that approach has kind of worked out? And, I don't know if you want to touch on the Bitcoin bond and some of the other ideas that you guys have had over the years.
Yeah, so I think probably 2014, 2015, we did a terrible job at introducing the right product for the market. We had a low leverage product that was not what the market wanted. It took us 9 to 10 months of having no volume to figure that out, and sort of we moved to a higher leverage product, socialized loss type of system. Probably up until middle point of 2018, we were really able to churn out different ideas that we had with pretty much free cost in terms of the technical infrastructure to put it in place. However, unfortunately, due to the way that our system was architected, starting in 2018, we had some technological, bottlenecks. So if you've traded on our platform, the overloads, the inability to submit an order when the market's really gyrating around, creates a terrible customer experience. And at that point, we really weren't able to launch any new products, because even if they were successful, they would cannibalize the ability for us to accept orders from our clients, and we want to offer a good trading experience. And so I guess we've sort of almost dealt with that over the last 1.5, 2 years. Now we're getting to the place where we feel like we actually have enough headroom to start launching new things. And all the ideas that are bottled up in the company with some of the really cool people that we have working there, we can start pushing those out into the market. Now, it might not be a Bitcoin bond or something like that, but maybe some new futures contracts on different altcoins, different types of structured derivatives that we've been working on, but we finally have the capacity to actually put those in place.
Yeah, and I think the market's ready for it, or closer to. Something else I don't know if you want to touch on about, I think we had an interesting meeting in New York a couple of years ago where, it was very clear to me, and I was very impressed how you keep, the approach you've taken from the beginning and putting everybody on an even playing field. Retail investors, institutional investors, that's very different than a lot of institutional exchanges. So I don't know if there's anything you want to kind of share about that to clarify, and also kind of a little bit about how the insurance fund works.
Sure. So I guess the issue is, I guess starting early 2000s really was the technological arms race between different HFT firms to have really fast connectivity into the exchange, whether that was co-locating their algorithms at the exchange's physical rack, whether that was using microwaves to beam orders faster to the exchange or what have you. And so essentially you have these funds spending hundreds of millions of dollars on CapEx for IT infrastructure in order to beat their competitors to put their order faster on the exchange or be faster in the queue of which order is going to get executed next. What that doesn't have anything to do with is their ability to predict the market or provide real liquidity in the market. They're really good at spending lots of money on IT and connecting to the exchange. And so what you've seen is obviously that works really, really well at scale. And so now you probably have 10 to 20 firms who probably dominate volumes for a majority of assets and all of them, the major exchanges worldwide. Now from an exchange point of view, that's actually not a good thing because now you're beholden to a very small set of clients and everybody else feels like they're at an unfair advantage. And you get books like Flash Boys and all these sort of accusations of untoward behavior by these very well-capitalized groups. We've taken sort of the opposite approach. We want to have a wide breadth of clients who don't make up that much of a percentage of our volume so that we can actually focus on what we would want to do rather than what our clients might want to do, which would be not at the best interest of the firm. So we don't offer any co-location. We don't offer any private APIs. So it's everybody enters the pipe at the same speed. And it's one of our core values of fair play, efficient markets, that sort of thing. So we don't want people to spend hundreds of millions of dollars in IT infrastructure. We'd rather them just be better traders.
Mm-hmm. Another amazing thing has been by limiting the pipe to only Bitcoin in and out, that's been something that's really added to the security of the exchange as well.
Yeah, it's easier to manage one wallet rather than, I don't know how many, Binance, some of the other competitors who have all these different altcoins have to manage all these different blockchains. They're obviously all not up to the same standard and robustness as the Bitcoin blockchain. So in terms of the technical workload and securing one asset, I think it's been definitely an advantage of ours.
Yeah. So what about, I think you've had some interesting comments in the past about some of the competitors in the space. How do you think about the competitive landscape today?
I'm on good terms with all of our competitors. I think I was playing pool last night with one of my other derivatives competitors, and I like everybody. And I think that it's really cool that everyone's taking different ideas to get to the same point, building liquidity for the market, wide breadth of financial products. Some people do different things differently. Fine. I have no problem with it. I think it's good that, at least in the derivative space, there's a lot of attention on the different companies, and we learn a lot from everybody else in the space, and obviously everyone learns stuff from us as well. So I'm actually very happy about the quality of the competitors that we have in the space.
Yeah, no, and I like that approach and mindset. For the past couple of years, I've been trying to stress to a lot of people that this has a chance to be the greatest non-zero-sum game the world's ever seen, right? And so it's exciting to be part of an industry that's growing like that, but also where you have real cooperation and kind of friendly competition with a lot of firms, much different than the traditional banking and finance environment.
Yeah, definitely.
And so what about the markets in Asia today, like that you think are vitally important to kind of understand for the community here about what's going on out there?
China, Japan, Korea, Russia really is Bitcoin, in my opinion, in terms of trading volumes. They determine what the setting clearing price of Bitcoin is. They might own most of the mining gear. These are the traders at the margin who trade a lot. And there's various reasons for that. But at the end of the day, there's a very big trading culture, especially in Asia. And a lot of people see this as one of the only places where they actually have a chance at making money. Because if you want to trade on some of the larger exchanges, the notional value of these contracts are so high that you need to be a very large hedge fund to actually afford it, or you need an ISDA to actually interact with a bank to trade these types of derivatives. So I think the fact that there's a lack of financial products on the retail level, or even on the pro trader level in a lot of these countries, has made them gravitate towards trading crypto, and that's why you see the majority of the volume happening in those regions.
All right, and now what about, as you've kind of built up the war chest a little bit and started to get into some other activities in the space and start to be more active on the investment side, kind of how have your views and kind of thoughts shaped where you've started to allocate capital in the space? Yeah,
so I'd say that the BitMEX Ventures team, we're really focused on emerging market exchanges. So we've made investments that have been publicized in Taiwan, Philippines, Middle East, and there's a few more that are coming out in different countries. But essentially, these are places where you have a young population who doesn't have an affinity for a large, multinational bank or brokerage house. And so if you have a digital-first exchange offering a very compelling product and good customer service, these people are more likely to put their money with that platform than, say, a Schwab Asia localized version. I don't remember when the statistic is from, maybe 2018 or 2019. There's an exchange in Indonesia, I think it's called Indodax now, and they have more registrations than the national stock exchange. Indonesia obviously has a very young and growing population. So that's something, a core area of investment that we see is, digital asset trading, whether it be Bitcoin or other cryptos, and investing in those platforms and helping them grow and, grow in the right ways, get to profitability so that there's more distribution channels in those markets.
Mm-hmm. Yeah, and actually, I was just talking to Meltem yesterday about Indonesia, and I was thinking back to the time in Hong Kong, and Indonesia is one of the most restrictive currencies in the world, the rupiah, right? And so when you think back to all the dynamics and the differences between the FX markets across Asia, when you have a lot of restricted currencies, right, that's what's led a lot of the people in those countries to get into Bitcoin and to look into digital currency. So now I have to ask you this, as we think about kind of the future of the space, wanted to just get, if you're comfortable, put some price predictions out there, and just other stuff you're excited about. You mentioned options, and kind of what else you think is going to be important developments in the space over the next 2, 3, 5 years.
Yeah, I think obviously the companies in the space are maturing a lot, and so what used to happen were a lot of companies took all their retained earnings and they held Bitcoin or crypto. And a lot of them found out the hard way that's really, really bad to do when the thing drops 80% and you can't pay your staff and you have to start laying off people. I think that people are getting a lot smarter about how they manage their cash flow. And once you start getting smart about managing your cash flows, then you start becoming more receptive to some higher level types of derivative products, optionality, structured futures products and sort of things like that. So I think miners, some of the other exchanges are going to start getting more into how do I smooth out my cash flow volatility? And that's going to mean some sort of derivative solutions. I think, and that's the component that's really going to lead to volume leaking into the vanilla option space. I don't really think that the screen option space is going to be the first thing that's going to develop. It'll be on the back end where you have people who finally appreciate the need to hedge future outcomes with these sort of derivatives, trade these things in size in the OTC markets, and then those brokers sort of filtering that stuff down to the vanilla screen. In terms of my 2020 price prediction, I think I'll keep constant 20,000, all-time high. Oh. Get back up there, keep people happy. But yeah, I don't know.
That's a good and safe one, but what I've thought about is as soon as we get close to that level, I don't see it stopping there.
Right. It's going to be one of those levels it'll stay there for a while. It'll be very tricky to push past, but once it does, it'll be explosive because at that point, then there's a lot of people who are underwater for 2 to 3 years. Now they're feeling happy again. Now they're ready to spend money on different types of projects, take more risks in the types of things they're investing in this industry. So, people spend more money when they're happy.
Yeah. An important thing about that I'd like to clarify too, I actually would make the case and argument that I don't even really look at 20,000 as the real high. I look at it more as a blended price of like 15K. Right? Going back to the finance days, I like to think about kind of VWAP prices and average price over a period of time. Bitcoin only traded above 15K for a couple days. Right? If you look at December 2017, January 2018, during that period, the average price was somewhere between maybe 12 and 13K. Right? So that was the average price that people got in. And this summer, we got close to that price level, right? And we're testing it. So, when you get close to testing those price levels, same thing like you said, people are back to flat. Anybody who had bought and is long is back to flat or profitable on their investment. And so, that's when they start to look at other stuff in the space. Arthur, this has been amazing. Thank you so much. Thanks for joining us. There's all these Swiss chocolate for you. Chocolate. and we're going to need some more snow here to get Arthur back next year.